All right, in this video, we're going to break down a story from an insider from the actual .com era, going back in time a little bit and relate it back to the current day situation that we're currently in. So here it goes. Gather around, kiddies. Let me tell you a story of the last time a bunch of nerds, grifters, and PowerPoint prophets convinced the world that adding a bit of jargon to a bad idea would make it gold. They called it the .com boom, that glorious era when you could duct tape .com to the end of a dog food delivery service and IPO your way to a yacht before anyone noticed you had any revenue, no real plan, and no product. It started going commercial in 92, but nobody gave a shit until 1999. Then suddenly, every guy with a GeoCities page and a dream of a digital dog leashes was a CEO. All you needed was a domain name and a buzzword. You didn't have to spell it right, epetsonline.biz. Here's $50million.com. Don't spend it all in one quarter. The bubble popped in 2001, like a zit on the face of a financial puberty. The market vomited up all of the speculative Kool-Aid, and the .com graveyard grew bloated with startups, tombstones bearing names like Flaws, Webvan, and Pets.com. Companies that are now just cautionary footnotes in MBA programs. But here's the punchline. Crypto is just like Web 1.0. Wearing a trench coat, pretending that it has a degree in economics. It's the same show, same time, slot, different acronym. Swap it out with e-commerce, with Web3. Swap it out with dial-up, with Discord. It's the same circle of hell. The only innovation is now your fake company runs on a blockchain that breaks if more than 3 people use it at once. You've got people shilling JPEGs of rocks, selling governance tokens for decentralized finance platforms that are run by 2 guys in a group chat and launching chains that promise scaling but can't handle a single video game transaction without setting the network on fire. And just like the 1990s, everything thinks it will last forever. Guess what? We're already in 2000. The clowns are juggling, flaming tokens, and the circus tent is sagging. The difference this time? The original value, the real core, isn't in the noise. It's in the thing everyone ignored, a fixed protocol. One that scales. One that doesn't need to change every 5 minutes to chase VC scraps or appease Twitter mobs. A protocol that works like HTTP did, quietly, powerfully, without the drama. After the .com collapse, there were a few years of silence, a wasteland. No VC handouts, no breathless headlines, just developers quietly building. That's where we're headed now. The junk is going to rot. The influencers will go back to selling protein powder. The scam coins will die. What will be left is what can scale, what can handle real world use, what's boring and brilliant all at once. The difference between a fad and a revolution is whether anyone still uses it when the cameras stop rolling. And when that day comes, and that white paper poets and meme flippers will be gone, and what's left will finally start to build something that matters, just like the internet, just like before. Well, friends, this is 2000 all over again, and I remember it like yesterday, being in the boom and selling furniture at Macy's in college. And people would come in and just spend money like crazy on furniture, and they freaking went nuts on it. And then all of a sudden, 2001 came along. We hit it, still killing it. Then all of a sudden, it just collapsed. I didn't notice why at the time, but I saw it and I felt it. And it was just an artificial bubble, you know. And that's really where we are. Think about crypto, BTC, and crypto memes and JPEGs on steroids. What are they doing? What use is there? 2 guys on a Discord chat and a freaking thing. I mean, where's the company? Where's the value? And VCs injecting money into what? Into what? A blockchain project that can't scale? You know, sounds like there's only one solution to me, one exciting solution. So I'll let you figure it out from there. Hit the ones, and that is from X at CS Tamanaga. I'll see you at the top.